Hello, this is Dr. Karen Nunez, and this is the problem solving session for Chapter 6. So hopefully this will help you prepare for the application assignment for Chapter 6 and the quiz for Chapter 6. Let's get started. Our first exercise is BE 6-1, and we're going to keep this simple with just 3 units of product. So our initial assumption here is that this company has made 3 purchases, 1 unit for 100, 1 unit for 120, and 1 unit for 140. And they made 1 sale. So they only sold 1 unit of product. So 1 unit sold and they sold for $300. That's our sales revenue. And what we need to be able to do is use the 3 methods, FIFO, LIFO, and weighted average, to determine 2 things, the gross profit and the ending inventory. So we need gross profit and ending inventory. So let's see, let's get started. Let's start with the cost of goods sold first. So we're going to look at the FIFO method. And for FIFO, we need to determine that gross profit. Now, gross profit. What is gross profit? How do we calculate gross profit? Well, gross profit, and I'll put that here. Gross profit is our sales. And we know what the sales are. The sales are $300. Sales are $300, and we want to subtract the cost of goods sold. And cost of goods sold, I'm going to abbreviate that. I'm not going to spell that out every time I need it. Cost of goods sold is going to be abbreviated COGS, that cost of goods sold. And what is that? Well, the cost of goods sold is the cost of the unit that we've sold. We only sold 1 unit. And under the FIFO method, we're going to assume that the first cost in is the first one out to cost of goods sold. That's the $100, right? We're assuming that the first cost in is the first cost out. And again, it's the one that cost $100. First cost in is the first cost sold. So we end up here with a gross profit. Gross profit. And a gross profit is $200, right? That's our gross profit. So sales less cost of goods sold gives us the gross profit. And what's the ending inventory? Well, under FIFO, the ending inventory. The ending inventory under FIFO, well, FIFO assumes that the first costs in are the first ones out. So the last ones are still in the ending inventory. So we bought 3 units, we only sold 1. There are 2 units in the ending inventory, right? So we purchased 3 units and we sold 1 unit. Therefore, the ending inventory equals 2 units. So the ending inventory of 2 units, right? We have 1 at, remember the FIFO method, first in, first out. It's the last ones that are in the ending inventory. We have 1 at 140 and 1 at 120. 1 at 140 and 1 at 120. The total is 260. Total is 260. So total ending inventory is $260, and that's not what I meant to do. The total is $260. That's our ending inventory. So under the FIFO method, right? First in, 100 is the first out to cost of goods sold. And sales less cost of goods sold gives us gross profit. And if the first one in is the first one out, then the last one is left in the ending inventory. 140 and 120. And let's take a look at LIFO, that LIFO method. So B, LIFO. LIFO, well, we need to do the same thing. So we need to determine the gross profit. So sales, again, sales, well, we only sold one unit, and that sale was for $300. And then we have a gross profit. My gross profit when we subtract the cost of goods sold. Cost of goods sold. LIFO. Last in is the first out. Last in is the first out. So the last one in is the one for 140. The last one in is the one for 140, which means we have a gross profit of 160. Gross profit is 160. Gross profit of 160. Under LIFO, under the LIFO method. And our ending inventory, well, now under ending inventory. So LIFO is the last in, first out, which means the first ones are still going to be in the inventory, one at 100 and one at 120. So we have one at 120, and we have one at 100, which gives us a total of 220. The ending inventory under LIFO is 220. And if instead we were to use the weighted average, C, if we were instead to use the weighted average method. So again, we need the gross profit. So let's see, and this is weighted average. Weighted average. And again, we want sales. And what are the sales? Well, the sales still are $300. And minus the cost of goods sold. Well, weighted average assumes that every unit is going to have an average cost of 120. The total cost of 360 divided by the total units, $120. Every unit is going to have a cost of $120 essentially. So the gross profit is 180. And the ending inventory, well, the ending inventory is 2 units. And every one of those units bears that $120 cost. So what we're saying is we have an ending inventory that has cost of $240 under the weighted average approach. So we get to see FIFO, first in, first out to cost of goods sold, and the last ones are in the ending inventory. LIFO, last in, first out to cost of goods sold. The first ones are in the ending inventory. And weighted average, well, it's just the average of everything. Okay, average everything. Okay, let's do a few more. So in BE 6.2, we have what's called a perpetual inventory. Perpetual means that you don't wait till the end of the period to determine your costs. You do it after every transaction. It happens perpetually, so it's continuous. So in this case, we're using a perpetual FIFO. FIFO, first in, first out. And what we want to be able to do here is to determine the cost of those goods that we sell just on October 24th. We don't want a total cost of goods sold. We just want to know what the cost of goods sold is for what we sell on the 24th. And we want to know what the inventory is on the 31st, just on the 31st. So again, perpetual inventory costing system. So let's go back to the typewriter mode. And what's happening here is a perpetual inventory system. A perpetual inventory system. So let's kind of keep track of things and flow through. So on October 1st, we have this inventory, right? And the inventory is 200, right? It's 200, and the 200 are at 200 are at 4. And then we sold. We make a sale, right? So we sold. What we sell? We sold 180 units. We sold 180 units. So minus 180 means that all we're going to have left are 20, right? So after we do that, we've only got 20 units left, and those 20 units have a cost of $40 perpetual. After every transaction, we've got to adjust our inventory. So we have an inventory of 200 at 40. We sell 180, we're left with 20, and those 20 have a cost of 40. And then we make a purchase, right? On this, we make a purchase, and the purchase here is 180 at 45. We buy 180 at 45. So it's plus 180, and 180 is at 45. So what do we have? Well, we have the 20 plus the 180, or we have 200. That's what we have, right? It's going to equal 200. And the 200, well, we got two layers. We got 20 at 40, and we got 180 at 45. And now what happens is, now we get to what we're interested in, which is the 24th, right? Now it's 10/24, right? And what's happening? Oh, we made a sale. We sold 150 units, right? So now it's minus 150 units, minus 150 units. And we need the cost of goods sold. Where are the costs coming from? Where are the costs coming from for the 150 units? Well, let's see. FIFO, first in, first out. First in, first out. Well, we only have 200 units, and we have 20 of them at 40, 180 at 45. First in, first out. So we're going to have 20. It's going to be the first ones out. 20 at 40. First in, first out. And then we're going to need another 130 because we sold 150. If we assume 20 come from this first layer here, first in, first out, then we also have 130, and the 130 is at the 45. So that's what we sold. We sold 20 at 40 and 130 at 45. So what does that equal? Well, let's go here. Let's do this. So 20 at 40 is 800, and 130 at 45 is 5850. So the sum of the two is 6, comma 650. So that's what the cost of goods sold is. This is A, right here, A, right? Perpetual FIFO, first in, first out. So when we get to the 24th here, and we're trying to determine the cost associated with the 150 units, this is all we have left right here, right? Because we've already sold, right? We bought the 200 at 40, but we sold 180 of them. So there's only 20 of those left. So the first in, first out, first in, first out. We only have 20 at the 40, and we have 180 and then we have the 180 at 45. So we'll sell 130 of those. And what's our ending inventory? What's the ending inventory? Well, let's see. B The ending inventory. What does the ending inventory equal? Well, so right here, we had 200 and we sold 150. There's only 50 units left. There are only 50 units left, right? Only 50 units left. So of these two layers, right? The 20's gone and 130 of the 80's gone. So what do we have? We have 50 at 45, 250. That's the ending inventory. So this, right, is the cost of goods sold, right? Using FIFO, first in, first out. That's the cost of goods sold. And this is the ending inventory on October 31st, right? This is where we're at on 10/30, 10/31. Okay, so that's BE 6-2. Let's do another one like that so we can have just a little bit more practice on that. So in this case, perpetual again, perpetual LIFO now, perpetual LIFO. So let's see. We're starting with our inventory, right? We start with an inventory of 90, and the 90 units are at 56. And what happens? Well, now we got a sale, right? We got a sale. So we sold 60 minus 60, right? So what's left? So now you have a balance, right? Of only 30. And the 30 at 56. LIFO. Well, you only have one layer. Doesn't matter which method you're using. The 30 are sold that cost 56. Okay. So the 30 are sold and those 30 had a cost of 56. What happens next? Now, let's see, on July 15th, we make a purchase, right? Make a purchase of 120. So now it's plus 120, and the 120 have a cost of 60. 120 have a cost of 60. So what do we have now? So the balance. The balance, so we got 150, right? We have is 150 units. And those 150 units, we got two layers, 30 that cost 56 and 120 that cost 60. That's what we have. And what we want to know in A is the cost of the units that are sold on July 27th, the 80 units, the cost of the 80 units that are sold on July 27th. So now it's July 27th, right? And we sold 80 units. And what we need to know is the cost for those 80 units. Well, what cost are we going to assign to those 80 units? And 80 is using LIFO, last in, first out, the cost of goods sold. So here, so let me just make a note here that we're going to have an ending inventory, right? The 150 minus 80 is is the 70, and we'll come back and figure out a cost for that in a few minutes. But right now, the July 27 cost of goods sold. The July 27 cost of goods sold, the 80 units. And again, we're using LIFO, last in, first out. Well, so here's what we have, right? We have 150 units, and it consists of 120 at 60 and 30 at 56. And the cost of goods sold should be based on LIFO, last in, first out to cost of goods sold. What's the last one in? 60. The last one in is 60. So on July 27th, the cost of goods sold should be based on those 80 units, 80 at 60, which equals 4,800. Which equals 4,800. Okay, that's our cost of goods sold. And we still have 70 units left. So what's our ending inventory? Well, that's 70 units, right? We have 70 units left. So again, the 150 units that we have here, right? We know that 80 of the 120 are considered sold. And the LIFO is last in, first out. That's why the 80 are going out first. The ending inventory is going to be based on the first ones. So we've got a couple things here that make up the 70 units. The ending inventory is 70 units, and it consists of the 30 at 56 and 40 at 60. How did I know that it was 40? Well, because the total has to be 70. All right. Total has to be 70 units because that's all we have left here at the end of the period. And again, LIFO's last in, first out. So the earlier ones are going to be in the ending inventory. And this is all we have, right? We only have, when we get to the 27th, all we have are 150 units, 30 at 56, 120 at 60. But we sold on July 27th, 80 of those. So there's only 70 left, right? 30 at 56 and 40 at 60 altogether. Well, let's put some numbers in. Let's go ahead and extend this here. 30 at 56 is 1680. And 40 at 60 is 2,400. So the 70 units, altogether, the 70 units have a cost of 4080. 4080. So that's cost of goods sold using LIFO, last in, first out. The last ones go to cost of goods sold. The last ones in are the first ones out. So the earlier ones are going to be left in that ending inventory. Okay. Okay. Now let's go back to a problem where we're going to look at all three methods side by side. So we've got 75 units that are in the physical inventory at the end of the period. 75 units. So you could see uh, that we have 300 units that are available for sale in this exercise. And we're told at the end of the period, there are only 75 units left. Only 75 units left. And that's what we need to do, is determine the cost of that inventory. So we don't care about cost of goods sold in this exercise. We just want the ending inventory. So we need the ending inventory, right? Of 75 units. And we're going to start with FIFO. FIFO, ending inventory of FIFO. So FIFO, the first ones in are the first ones out to cost of goods sold. First ones in are first ones out, which means it's the last ones that are going to be in that ending inventory. What are the last ones? The 60. Start with 60. So we got 60 at 200. And we can see that that equals 12,000. And we have 75 units in the ending inventory. So in addition to the 60, well, we've got to have another 15 because 60 plus 15 gives us the 75 that we need. And what's the cost of those? Well, what's left? Well, the next one, the next layer would be the 180. 50, 15 at 180. And what's 15 at 180? Well, 15, got got an extra at sign in here. 15 at 180 is 2,700. So the 75 units, 60 plus 15, all right? 60 plus 15 equals 75. $14,700. 14,700 is the cost of the ending inventory under FIFO. First in, first out. First in, first out. Let's take a look at LIFO now. LIFO, last in, first out. LIFO, last in, first out. So again, we have 75 units in the ending inventory. LIFO, the last ones in are the first ones out, right? So the last ones in are the first ones out. These are the ones that are assumed to go to that cost of goods sold. Last ones that are the first ones out to cost of goods sold. It's the first ones that are going to be in the ending inventory. The first ones are going to be in the ending inventory. So we're going to need 40 at the 165. So again, let me emphasize. LIFO, the last ones in are the first ones out to cost of goods sold. So the first ones are in the ending inventory. And the 40 at 165 is 6,600. And again, we have 75 units. So that means we need another 35, right? Because 40 plus 35 is the 75 that we need. And what's the cost of those? The 180. We need the 180. And 35 at 180 is 6,300. Put it all together. And we've got the 75 units, right? And those 75 units have a cost of 12,900. And I have a typo here. 35 at 180 is 6,300. And that's the cost of the ending inventory using the LIFO approach. That's LIFO. Last ones in are the first ones out to cost of goods sold. So it's the early ones, the 165 and the 180. Those units are in the ending inventory. FIFO's first in, first out to cost of goods sold. So it's the last ones that are going to be in that ending inventory. And then weighted average is next. C is weighted average. So C, weighted average. The weighted average method, well, the first thing we need is an average cost. The average cost is the total cost divided by the number of units. The total cost of the inventory is 54.6. 54.6. So again, it's the total cost divided by the total units. That's essentially what we're doing. We're taking the total cost divided by the total units. So again, the total cost is the 54,600. And the total number of units available is the 300 units. So what we have here is a unit cost of $182. So the average cost is $182 cost per unit. So the ending inventory of 75 units. So 75 units at a cost of $182 equals 13,650. That's the ending inventory cost under weighted average. It's just the number of units, 75 units at an average cost of $182, right? Unlike FIFO, where we had to take the ending costs, unlike LIFO, where we had to take the beginning costs for that ending inventory. Weighted average is just an average. We just want an average cost for those units. Okay. Okay, so next we're going to take a look at the lower of cost or market method. So let's switch gears and look at the lower of cost or market method. So essentially we need to apply the LCM method to each inventory item. Apply it to each inventory item. So we've got the quantity, we've got the cost per unit, we've got the market value per unit. It's just a matter of doing the math and then figuring out which one's lower. So I have that on the next screen. So again, let me talk through this one more time. The cost, the cost is $10 a unit. We got 6,330 units. Multiply the cost times the number of units, and we'll get the total cost. Multiply the number of units times the market value, and we'll get the market value. So, and I do not have that. I thought I had that available, but I do not. So let me put that at the bottom here real quick. So let's see. JFW1, JFW1, I'm going to put the total cost. The total cost of JFW1 is 633. And the total market is 69,630. So the total cost and market, and then LCN. So again, where'd the 63,300 come from? 6,330 times 10. That's where that's coming from. Okay, where's the 69,630 coming from? Well, it's 6,330 times 11. Okay, so I can put in here one asterisk and two asterisks just to kind of illustrate what I've done here. So again, one asterisk is 6,330 units times the $10 cost. right? And two asterisks, the 630 units times the $11 market value. Okay. And of course, the LCM. What LCM number should we be using? Well, the lower of the two. We should be using the 6330. Okay. And if we do the same thing here, for SAW9, SAW9. So the cost, and you know how to do that calculation. I'm not going to put the calculation at the bottom for you because you should be able to figure that out, right? So the cost is 41,040, and the market is 38,760. Okay, so again, it's the 1140 times the 36 and the 1140 times the 34. And we want the lower of the two. What's the lower of the two? 38,760. Okay, so when we apply the LCM to each inventory item, this is how we would report each inventory item and, of course, our total. The total that would be on the balance sheet is going to be the 102,060. It's the sum of the two, right? The 63,300 and the 38,760. Inventory would be reported in total on the balance sheet, right? So these are the individual line item numbers, but it's the total that gets reported on the balance sheet using the LCM, right? Using the LCM method, that's the value that gets reported on the current asset section in the balance sheet. Okay. So let's see, got a couple more we need to work through here. Let's go back to the periodic inventory and let's value the inventory again. And then we'll finish up with another LCM problem at the end. So let's look at periodic inventory system, exercise 612. What's a periodic inventory system? How is that different from a perpetual inventory system? Well, perpetual, I explained earlier, that means that after every inventory transaction, you summarize inventory. Periodic means you don't do that. You just wait till the end of the period. So we don't have to do it after every transaction. We'll just wait till the end of the period. And in this case, they took a physical inventory. They took a physical inventory and they determined that they have 1,500 units on hand. So this is our ending inventory. We have 1,500 units on hand at the end of the period. And we want to determine the inventory cost. So we want ending inventory again. We want an ending inventory number, right? The ending inventory equals 1,500 units. And we want to use the FIFO method. FIFO to determine the cost of that ending inventory. The ending inventory using FIFO. Well, again, FIFO, first in, first out to cost of goods sold. So the first ones in are going to be the first ones out. But what we care about is the ending inventory, which would be the ending ones, the last ones. First ones in are the first ones out. It's the ones at the end that are going to be in the ending inventory. And if we only have 1,500 units, then it's going to be 1,500 units at 10. Which is going to equal $15,000. That's the ending inventory under FIFO, 1,500 units. First ones in are the first ones out to cost of goods sold. It's the last ones that are still in the ending inventory under FIFO. And LIFO, well, LIFO is just the opposite, right? LIFO. So LIFO, and again, we have 1,500 units, right? And let me kind of fix this here. So LIFO assumes that the last ones in are the first ones out to cost of goods sold. So now again, we've got 1,500 units. And again, LIFO says that the last ones in are the first ones out to cost of goods sold. So the first ones are going to be in the ending inventory. The first ones, $4, 1,500 at $4, right? 1,500 at $4 is $6,000. That's the ending inventory under LIFO. But C, weighted average. Under the weighted average method, well, again, we need a total cost. We need an average cost, right? And an average cost is going to equal the total cost available divided by the total units available. And we need to figure that out because they didn't give it to us. So the first thing we need to know here, let's see if we can mark this up a little bit. So we need to know the total number of units and we need a total cost. So we need to add the 5,500, the 6,400, the 6,000, and the 2,100, and that'll give us 20 units, 20,000 units. So the total number of units available is 20,000. So we have the denominator, if you will. Next thing we need to know is, well, what's the total cost of all these units? Well, we need to do the math, right? If we do the math, then we'll have what we need. So typewriter mode's a little bit easier for me. I'm going to switch to that. 5,500 units times $4 is $22,000. And 6,400 units at $6 is 38,400. And 6,000 units at $8 is $48,000. And 2,100 units at $10 is $21,000. And put it all together now. And let's put in a total again, right? We want a total. We want to know what the total cost is available for all these units. Well, that's $129,400. So the total cost available is the 129,400. And that's for 20,000 units. So the average cost is $6.47. $6.47. So if we have 1,500 units, $6.47, that's going to equal 9,705. That's the cost using the weighted average approach. That is our weighted average cost. Okay, let's look at our next to the last one, another inventory problem. And this one, we need to figure out everything. We need the ending inventory. We need the cost of goods sold under both FIFO, under all three methods, FIFO, LIFO, and weighted average. FIFO, LIFO, and weighted average. Okay, so let's see. Let's do Let's do the weighted average first, since we're kind of in weighted average mode. Let's do the weighted average first. So we're going to need to be able to figure out the same thing that we just did. We need to know, let me switch to my pencil here. We need to know total number of units, and we're going to need a total cost, right? So while we already have that kind of in mind from the last problem, let's do that first. So add all these units, and we have total units of 800. We got 800 units. And we need a cost. So the cost here, 180 units at 108 is 19,440. And 224 units at 110 is 24,640. And 200 units at 116 is 23,200. And 196 units at 120 is 23,520. So our total, let's see, we want to add all these up. We get a total of 90,800. 90,800. Right? So our average cost, right? So let's get back to the typewriter mode. The average cost is just going to equal the 90,800 divided by 800, which equals 113.50. That's the average cost. That's the average cost. So let's see. What we know here is that we have total available of 800, right? We have 800 units. Total available units is 800. And the ending inventory is only 208 units. So if we only had available 800, but we get to the end of the period and there's only 208 left, then that means we sold are going to equal 592 units. We sold 592 units. Okay, that's what we sold. We sold 592 units. So the weighted average cost, the ending inventory is 208 units. So 208 at 113.50. 208 units at 113.50 is 23608. That's our ending inventory. And the number of units sold is 592. At same thing. 113.50. 67,192. So the ending inventory, the 208 units, has an ending inventory cost of 23608. And the cost of goods sold is a cost of 67192. And that's weighted average. Find the average cost of 113.50, multiply it times the units in the ending inventory. They gave us that. Multiply it times the units sold. We had to figure that out. Total available is 800. They only have 208 at the end of the period. The other 592 were sold. So let's focus on FIFO and LIFO. And then that'll be it for this problem solving session. So let's see. Let's do the FIFO first. So FIFO first. FIFO. So when we look at FIFO, what we want to do is focus on first in, first out to cost of goods sold. Let's do cost of goods sold first. First in, first out. Cost of goods sold. So the cost of goods sold, first in, first out. They sold 592 units. And the first ones in are the first ones out. First ones in are the first ones out. 180. 180 that cost 108. And then the 224. First ones, 180 at 108, 224 at 110. So we have again 180 at 108. That's going to equal 19,440. And the 224 at 110, which equals the 24640. So again, I'm just taking these numbers, right? First in, first out. First the 180, then the 224. We only sold 592, right? So we have 180, we have 220, we have 180, we have 224. How many is that? Well, let's just put in a little subtotal here. So the subtotal here, right? What we have so far, 180 and 224 is 404, but we sold 592. So that means we need a few more units, right? How many more do we need? That means we need another 188. How do I know that? Because 404 plus 188 is 592, right? Equals. So let's see, what did I do here? Let's make sure that so the 180 plus the 224 is 404. But we sold 592. So we need another 188 units. 404 plus 188 gives us the 592. Right, that's what we should have. That's how we get the 592, and that should be an equal sign. Okay, that's where I'm getting the numbers from. So the 180, first in, first out. First, 180 at 108, 224 at 110. And then we've moved to this layer, 116. How many? 188 at 116. Which equals what? Equals 21,808. 21,808. So the total, put it all together, and the total here of everything is 65,888. Okay, that's the total cost of all those layers. That's FIFO. First in, first out, cost of goods sold. First in, first out. So first this layer, then some of this layer. First in, first out, till we get to 592 units. And what's the ending inventory? Well, the ending inventory The ending inventory. The ending inventory is only 208 units. And FIFO's first in, first out, the cost of goods sold. It's the ones at the end that are still in the ending inventory. The 196, right? So we still have the 196, but it's the 196 at 120. And we know that equals 23520. And remember, it's a total of 208 units in the ending inventory, so we still need another 12 units. So plus 12 units at 116 is going to equal 1392. Put it all together, and the total is 24912. 24912. So that's the total of our ending inventory using FIFO. First in, first out cost of goods sold. So the last ones are still in the ending inventory, the 196 and 12 of the 200. And let's see if we can't, right here. So the ending inventory we determined was the 24912. And the cost of goods sold is the 65888. Lastly, let's look at the LIFO. So LIFO, and we want to do the LIFO cost of goods sold. So cost of goods sold, LIFO is the last in, first out. Last in, first out. So we're going to be starting at the bottom here. And we sold 592 units. So we need 196 at 120. We need 200 at 116. Let's just start with those so far, okay? So we have the 196 at 120, which equals 23520. And then we're going to add to that the 200 at 116. It's going to equal 232. And where does that put us? Let's put in a little subtotal, okay? Well, that's going to put us at 396, right? That's what it does. It puts us at 396. So if we write the 200 plus the 196 gives us 396. But again, we sold 592 units. So we need a few more. So how many more do we need? We need 196 more. That's how many more we need. That will give us 592 units. And what are those units going to be costed at? Well, LIFO, last in, first out. So we got the 196 at 120. We got the 200 at 116, right? What's next? What's next is going to be 224 at 110, but we only need 196 at 110. And the 196 at 110 is 21560. That's what we need. Put it all together. 396 plus 196 is our 592 units. And the total cost of those units is 68280. 68280. That's what we need, right? So we've got our 592 units, and the total cost of those units is the 68280. And then the last thing that we need here is the ending inventory. The ending inventory. Well, we know a total of 208 units, right? 208 units. This is 208 units, and that's what we need. We need to determine the cost of the 208 units. And LIFO is the last in, first out. So it's the first ones that are going to be in that ending inventory. What are the first ones? Well, the first ones are going to be 180 at 108, and then the next layer will be at 110. So let's do that. 180 180 at 108, which is going to equal 19,440. And then we got 28 at 110. We need another 28. How do I know we need 28? Because the total needs to be 208. So 28 at that 110, right? LIFO, last in, first out. The cost of goods sold is the first ones, right? 180 at 108 and 28 at 110. And the 28 at 110 is going to have a cost of 3,080. Put it all together, and we've got the 208 units, and those 208 units have a total cost of 22. $520. Okay, so we've costed out the 208 units, and they have a cost of 22,520. So up here, all right, last in, first out. The ending inventory of the last in, first out LIFO ending inventory is 22,520, and the cost of goods sold for LIFO is 6,820. Okay. And that's about it. I think that's enough for our problem solving session. So the best way to learn this is by working through these problems and making sure that you're able to get to ending inventory and cost of goods sold numbers. I'll see you in the next chapter, chapter 8.